Welcome to Dorsey and Whitney's webinar on investing in the UK from China and HK, current trends and regulatory developments. I'd like to introduce Simon Chan, a partner in Dorsey's Mergers and Acquisitions Group. Simon?
Thank you, Sean. Good morning and good afternoon to our friends in China, London, and Europe. And I also see dial-ins from New York and America. Thank you. Have a good, very early morning. 中国和香港打过来的朋友，谢谢你们的支持。今天的讲座会用英语进行的。如果需要，今天的内容会有中文版，请与我联络。谢谢。So my name is Simon Chan. I'm one of the speakers, and I will be moderating today's panel discussion. So welcome to new 2022 Rules and Trends on Investing in the UK from China and Hong Kong. On behalf of my fellow speakers, we would like to thank you for sharing the next 1 hour with us. We promise to be fun, exciting, and informative. Next. On housekeeping, please submit your questions to the chat function, and we'll try to get to all the questions at the end. Next. Jumping to today's outline, while we have 12 items, they are basically in 3 parts. The first 2 will be short introductions. The second will be panel format, whereby we will set the scene, as well as in the third segment, we will be fleshing out the rules and deal trends that we are seeing. We will include some deal examples and ending with key takeaways to help you navigate your next deal. Next. So quick intro about the panel speakers. Next. Once again, my name is Simon Chen, and I'm the head of the Dorsey's Hong Kong office. I'm an M&A corporate finance lawyer. I help clients tackle VUCA issues, volatile, uncertain, complicated, and ambiguous situations. I'm admitted to practice law in Hong Kong, New York, and England and Wales as a non-practicing lawyer. With us today, we have 4 speakers from China and London. First off, we have my friend and partner, Karen Fan. She's the head of our Shanghai office. She's a PRC and New York lawyer, and she spent time as an in-house lawyer for one of China's biggest conglomerates, Fosun. Since her joining, Karen and I have teamed up on several cross-border deals. Next from China, we have my partner and friend, Ray Liu. He's stationed in the Beijing office, and he's the head of our Beijing office. Ray is also licensed to practice in New York and in China. Prior to him joining Dorsey, Ray was an in-house counsel at one of China's biggest state-owned banks, the Bank of China. Ray and I have also worked on numerous cross-border deals and also VUCA situation projects. We fly over to London to meet 2 of my partners there as well. First, we have Mark Taylor, who is our former head of the Dorsey London office. Mark is a senior corporate finance and M&A lawyer based in London. I've worked with Mark on several cross-border UK, Europe, and China-Asia deals. I want to share a fun fact about Mark. Mark travels with his guitar, so he's a superb travel mate and a lawyer to work with. Last but not least, we have Stuart Worthy, a new addition in our UK M&A group. Mark is also based in our London office. Similar to Mark, Karen, and myself, he's a corporate finance and M&A lawyer. Stuart has a lot of experience handling UK UE deals for Chinese and Hong Kong clients. So thank you, my friends in London, Beijing, and Shanghai. So let's kick things off with London next. I'm going to invite Mark Taylor to talk about London office and the UK legal offerings for our audience based in Asia today. I believe this will help share with you the legal tools you have access to navigate deals in the United Kingdom. So good morning, Mark. Over to you.
Morning, Simon, and thank you very much indeed. And you'll be relieved to hear that I haven't got the guitar with me today. I'd like to just give a little bit of context. I think you'll all be familiar with our offices in Shanghai, Beijing, and Hong Kong, but maybe not so familiar with our office in London. We have an office of about 40 people, Stuart and myself on the corporate and the M&A side. And I would say, don't think of us as being purely London, UK, because we act as the European hub for many of our clients. So through London office, you have access to a very broad network of European legal advisors as well. And so we're accustomed to managing that process so that it's most efficient and cost effective for our clients. The London office is primarily an M&A led practice. But again, we're not a one-trick pony, and we advise our clients in China and Hong Kong on a whole range of other areas. So we have partners specializing in real estate, in tax, in employment law, intellectual property, banking. So and these are all areas which are of interest to our clients. And we've worked with Simon, Karen, and Ray on various assignments that have taken in all those different advisors. That's probably enough about us. I would say that we very much enjoy working with our clients in China and Hong Kong, and we particularly enjoy working with our colleagues in those offices as well. And have had many hours working with Simon, Karen, and Ray. So that personal relationship is very important. And across Dorsey, I think it's fair to say, think of us as being a single firm, but with a number of different offices, and not, if you like, as individual offices, because the strength is in the whole rather than the individual piece. I think that's probably all I've got time to say. And perhaps, Simon, we can move on. Thank you.
Thank you, Mark. And we'll come back to you on other questions. So let's come right back to China. I've been chatting with Karen and Ray on some deal trends involving transactions that's going in or out of London and Europe. So maybe I'll start with Karen. Karen, so what are some of the Chinese investors looking for in the UK or in the EU?
Sorry, Karen, I believe your phone is on mute.
That's yes, better. Thank you. Thank you very much, Simon. So I'm making sure everybody can hear me right, but let me know. So in the policy of 2021, we continue to see that Chinese-owned business are doing impressively good in a number of important sectors of the UK economy. We all know that London has been a well-known financial center, but in my dealings with Chinese investors, I also see that in the eyes of many Chinese investors, they see UK as a center of innovation and high-quality R&D assets. According to a 2021 revenue growth analysis produced by China Chamber of Commerce UK together with certain other professional firms, among the top 30 fastest growing Chinese-owned business in UK by revenue, they come from the 7 highly innovative sectors, including business support services, consumer, financial services, manufacturing and industry, technology, media, and telecom, what we call TMT, private healthcare, and real estate and construction. And we've seen, despite all the difficulties of the larger background, we've seen M&A deals and fundraising deals being active in the past year. Just to name a few, the most eye-catching one, of course, is Tencent's takeover of Sumer Group, the video game company, at a price over 900 million pounds. I believe it's probably one of the biggest deals Tencent did in 2021 globally. And also among the 7 sectors, I think private healthcare is a standout. It reflects its pivotal role during the pandemic crisis. And we've seen the healthcare conglomerate WuXi AppTec purchased Oxford Genetic for the price around 100 million pounds. And this is a UK-based CRO. And we've also seen, other than those names we often see from the headlines, we've also seen the low-key industry players, including Pharma-Rong Beijing, acquired a biomanufacturing site called ABL site in UK for the price around 100 million. So all of this gives me a strong confidence that the cross-border investments by Chinese investors into UK, a major market in the world, is optimistic, and we keep having a strong confidence as a frequent cross-border participant, cross-border transaction participant. I still see it a very positive outlook in the cross-border deals from China to UK.
Thank you, Karen. That's really exciting. Ray, you work with a lot of state-owned companies as well as high-profile Chinese companies. What are you and your clients seeing from your perspective?
Yep. Well, thanks a lot, Simon. First of all, I fully concur with what Karen shared and her insights. And in terms of what these Chinese companies are looking for in the UK and European market, I think I will categorize them in 4 different investment categories, or let's say 4 investment incentives for Chinese outbound investments. Well, according to a survey by United Nations Conference on Trade and Development, 4 major incentives: market seeking, efficiency seeking, resource seeking, and created asset seeking. Well, for market seeking, obviously, Chinese company try to invest in the UK and Europe to explore and consolidate international market, because it's a very sophisticated and advanced market in UK, obviously. And for efficiency seeking, Chinese company investors try to reduce production costs as a fundamentally driving force for that initiative. And resource seeking, which is typical in terms of investing in, let's say, relatively less developed economies to obtain right of overseas assets to ensure long-term or stable supply of resources in the home market, but not necessarily, because it depends on what sort of resources the acquirers or the investors are seeking. And lastly, created asset seeking investment, which means the investors are trying to seek or obtain high quality production factors or innovation factors, such as overseas technology, IP, or talents, or brands to basically increase their profile in a global market. And in terms of what we're seeing relating to the UK market, I would say the most prominent one is the created asset seeking investment, seeking the IP and brand and managerial skills, etc. And then the second one, I would say, a market seeking investment, because UK is such an advanced market and attractive market for Chinese investors to sell their home products. And in particular, as my last note, I would like to say UK is so attractive, obviously, and as Karen just mentioned, London is just a one of a kind global financial center with active assets allocation, trading, and all kinds of activities. And UK in general has a very good and is stable and transparent political, legal, and regulatory environment, which is really attractive to Chinese investors and Asian investors. And also, Chinese investors will see UK as an important foothold and even an accelerator to enter into the European market, which give them a full play to the advanced industries and the brand and all kinds of resources. And lastly, the talents, good quality of life, and the very our gentleman style in typical UK style are attractive to Chinese audience and Chinese investors in general. So to wrap it up, 4 investment initiatives, and the created asset seeking one is, I would say, the most prominent one. Simon.
Thanks so much, Ray. Before we fly to London, let me just add a note of observation from Hong Kong as well, in adding to what we're seeing in Beijing, Shanghai, and Hong Kong. There seems to be quite a few divestitures in the UK market by Chinese and Asian companies in the first quarter, at least. And interestingly, what we're seeing is that some of the Chinese companies, either on the buy side, sell side, or are dealing with opposing parties, which are also from the Chinese side or the Hong Kong side. So that has been an interesting observation that we are seeing. And I'll add a note at the takeaway point to see, I think, why that is. Okay, well, thank you so much both for setting the scene on the China side and on UK EU deals. So let's fly to London again. And I'm going to ask Stuart some questions next. So Stuart, so based on what Ray, Karen, and I have been describing, what trends are we seeing from the UK side?
Thanks very much, Simon. So what we saw is Chinese global M&A deal making peak in 2016 at about 250 billion worldwide, and 90% of that was outbound. So during that period of time, Chinese firms globally were in buy mode, and they certainly made hay during that period of time. And in the UK, we saw Chinese firms investing in everything from infrastructure to luxury hotels to restaurants to soccer clubs, the full sort of suite of sectors. And as with all investments over the years, some of those investments have fared better than others. And some of those investments were in sectors that bore the brunt of COVID and the lockdowns and all of the issues that came with that. So we're now 5 years on from that sort of peak of deal making, and what we're seeing now is some Chinese companies, some of those investments are in financial distress, and the Chinese companies are looking to restructure or sell those international assets to help solve liquidity issues. And on the other hand, we're also looking at Chinese companies who are actively managing their portfolio of investments, perhaps taking advantage of high valuations and looking to lock in financial returns on those investments. So take each of these in turn. On the distress side of things, we've seen those sectors that have been heavily impacted by COVID, like casual dining, and that's a sector that probably needed. It was stressed before the pandemic hit, and then the pandemic was really the nail in the coffin. So last year I helped the Chinese owner of Pizza Express through their restructuring of that investment. It was quite a painful process for them, but a successful one. So we managed to help them carve out the Chinese business from the rest of the group as part of that restructuring. And also in real estate, we're seeing a number of Chinese real estate developers who are struggling to meet some of the new Chinese domestic rules on leverage, the so-called 3 red lines, facing liquidity issues domestically, and they're looking to raise cash by selling international assets, including assets in the UK. So we've been on the buy side and the sell side of where those businesses are looking to offload those assets. And then on the flip side, we're seeing Chinese firms looking to take advantage of high valuations. So we've seen like some pretty big deals in Spain. China Tianying, I hope that I pronounced that correctly, sold its global environmental business for 4 billion last year. It's been widely publicized in the UK that the Chinese owner of UK Power Networks is looking for a sale there. And overall, according to Bloomberg, this year should eclipse last year, which was the highest ever year for Chinese divestments globally of around 15 billion. So basically what we're seeing is a more rational M&A environment here for Chinese businesses with a mix of divestments and acquisitions.
Thanks so much, Stuart. So next, I was going to ask you on whether you have any survey or data to support this, because you seem to have already given us a lot of data information about that, on the size of deals, on the types of deals, the trends, and where this is all heading. So I'll pass it on to you, see if you have any data to support this.
Yeah, look, there's always a couple of surveys that happen each year. So there's a good one by EY. There's another good one that Grant Thornton put out each year. According to EY, 2021 saw the UK as being the most attractive destination in Europe for Chinese M&A. So the UK attracted 30% of all FDI into the region, Chinese FDI into the region. And then looking at the Grant Thornton survey, which tracks all M&A in the UK. So there was 3.6 billion of Chinese M&A in the UK in 2021, and that's despite COVID, despite all the travel restrictions. It just shows that deals are still being done in the UK, and I think Karen already mentioned some of the sort of highlights from that period of time, including Tencent's deal with Sumo, but also we've seen a lot of Hong Kong investors, and that's a mix of institutional funds and ultra high net worth individuals looking to make investments into UK real estate. UK real estate is still seen as a pretty safe bet internationally. So we've seen quite a lot of corporate real estate transactions involving Hong Kong and Chinese companies.
Thanks, Stuart. Deals are still being done, so that's great to hear. Next, please. So Mark, with the new laws, new rules, new policy, new year, 2022, can you tell us a little bit about the new foreign direct investment legislation, the so-called 2021 UK National Security Investment Law Act?
Of course. So we came to the party relatively late. The US, I don't know when CFIUS first came in, but I think it was in the late 70s or 70s or 80s. Most of the European countries have got some sort of foreign direct investment regulation. We started really this year on the 4th of January. Our National Security and Investment Act came into force. I think the key piece of that act, which is of interest to investors, is the mandatory notification and clearance process that applies not to all investments, but to 17 designated segments of UK industry. I'll come on to those in a minute, but effectively, it's what you would expect. We're looking here at advanced materials, advanced robotics, civil nuclear, transport in the sense of major transport hubs, so ports, airports, etc. And if you're making acquisitions in one of those mandatory notification sectors, then it's a requirement for the buyer. It's a buyer obligation. It's not a target obligation, not a seller obligation. It's down to the buyer to make a notification to the investment security unit, the ISU, in advance of that acquisition closing. You can exchange the contract, so you can sign the deal, but you can't close it until you've actually then got the clearance in place. It's not intended to act as a disincentive to overseas investment, just to be clear. I think there's a very clear policy statement by the government, which I'll read it out because I think it's worth hearing. It says that the power will not be used to interfere arbitrarily with investment. The UK has a proud record as one of the most open economies in the world, and as I say, we came so late to the party that I think that's probably self-evident. And the Secretary of State's power, this is talking about another power, which is to call in transactions once they've been signed and done, will not change that. So the government wants the UK to be the best place in the world to work and do business. Very bold statement that's got Boris Johnson written all over it. But the fact is that we do want to. This is not intended to be a disincentive. It's just balancing national security interests with also trying to encourage investment into the UK. As part of that, the timetable for getting this clearance is pretty tight. So there's got to be a response. You put the application in. The application, once accepted, a 30 business day clock then starts to run. Don't make the mistake of thinking it's 30 days. It's actually a month and a half as opposed to 2 months. It's 30 business days. The clock then starts to run. The unit has to respond within that 30-day period. The most recent one that we did, where we were assisting the buyer, we were acting on the sell side. The response came back in, I think it was 25 business days. So people are looking to try and beat these targets because I think it's recognized that we don't want to be holding deals up. There is a possibility, if there are questions raised in that first 30-day, there's a possibility of another 45 maximum business days being used by the government to make an assessment of the transaction. But in most cases, it will go through within 30 business days. I think that's probably, I think I might just leave it there for the time being. I think, Simon, you've got some more questions coming up for me, so I'll leave that there as a general overview at this point.
Yes, I do have a few more questions, so thank you. So you touched on the government statement, which is really great. Open economy, best place to do business. Next, I would like you to maybe dive right into the 17 sectors and also maybe talk a little bit about the UK government agency that's administering the NSI Act. And if you don't mind, I'm going to pop quiz you. So how was your experience in handling this whole application and approval process?
Well, it was an interesting experience in the sense that we weren't putting the application in, but we had to collate the information. And I think we'll find this is a feature of deals now going forward, when those deals are in sectors which are covered by the NSI Act. So the government has published a lot of information. There's not just the Act, there's also a number of statutory instruments. There's a lot of guidance out there published by the government. There's even the forms of, as you'd expect, I suppose, there's the forms of questionnaire that need to be completed in respect of each of the sectors if you think it's relevant to you. So we took the questionnaire, which is on the government website, and we worked through it with the client. In our case, it was a military or dual use sector. So a couple of switches, a couple of LEDs that could be used both in civil and also in military use. So we had to look at what the export licenses were, what the restrictions were. That's a good indication of which, whether you're well and truly into military dual use. I think the export licenses are absolutely key. I think the process took about a week and a half to prepare. We had a very, very good management team on this transaction. They were incredibly organized. I described the company as being like a Mercedes with a full service history, as opposed to being, no insult to Ford, but a Ford that you bought off the garage forecourt. So that made the process a lot easier. I'm not going to recite all the 17 sectors, but I suppose the ones of particular interest would be advanced robotics, for smart manufacturing, artificial intelligence. Communications is very broadly drawn, and I haven't had to look at the communications piece particularly. Data infrastructure, so internal wireless networks, or rather wireless networks which are put out to customers, etc., which might have potential for other uses. Military and dual use, of course. Quantum technologies, satellite and space technologies, suppliers to the emergency services, synthetic biology, and as I mentioned just now, transport as well, in terms of ports and airports in particular. I would say that this is not a reason not to do deals in those sectors, and one feature of the Act is it's not targeted specifically at overseas investment. It covers also internal. So if a domestic UK company buys another company operating in one of those sectors, it will be covered. So it's not a reason not to approach deals in those sectors. I can see it may encourage interest in real estate. Obviously, is not going to be contentious. Funds, education, healthcare, consumer. There's a whole range of other areas. But we found the process to be pretty streamlined. And one other thing I would mention is that you can actually speak to people at the BIS, the Department of Business, Energy, Industrial Strategy is where, if you like, the unit that monitors and assesses these transactions is housed. One thing just for completeness, if a transaction has already closed, if it closed after the 12th of November 2020, then there is still scope for that to be reopened, if you like, for any security concerns. But maybe we'll touch on that again a little bit later. Sorry, Simon, I feel I've perhaps given more information than you asked for there, but
oh, it's perfect. Perfect, thank you, Mark. And I believe we have attached the 17 sectors at the end of our slides, and we'll email those out to participants later after today's webinar as well. Next, please. So I guess you kind of answered it, but I think a lot of us sitting on this side of the world will want to know, does the NSI Act single out China or Hong Kong?
Well, the answer to that is no. And as I say, it applies universally to transactions, even by domestic companies. So it's not aimed at a particular jurisdiction at all.
That's really good to know. That's a little bit different to some of the experiences that we have dealt with in other parts of the world. So let's talk about deal structure, because I've been chatting with some deal professionals here in town in Hong Kong, and they've asked me this. When a Chinese seller is selling UK assets, say to a Hong Kong buyer, is that going to be NSI Act covered? You kind of answered it, but I would love for you to elaborate on that a little bit more.
Yeah, of course. So any business, any company that does business in the UK in one of those sensitive sectors is covered. So whether it's a branch of an overseas company, whether it's a subsidiary or an investment controlled by an overseas company, if it's doing R&D, manufacturing, or selling in the UK, then it would be covered. And actually, you raise a good point, because you could be doing a transaction that relates entirely to non-UK targets, and I think it's incumbent on the buyer in those situations to really take a look at those companies. Do they have operations in the UK? Is there an overseas subsidiary in the UK? Is it in a sensitive sector? So I think if you're a Chinese or Hong Kong company on the acquisition trail, or a fund looking to make investments and take control, it's worth having those 17 sectors up on the wall, piece of blue tack or whatever, and keep them in mind. And if the operation touches on any of those, then that's a red light flashing, and let's do a bit more digging and see whether we're in a sensitive, whether we have a UK connection, and therefore we could be subject to NSI. So, as I say, it's not just UK companies; it's judged by the sector and where that activity is carried on: R&D, manufacturing, or selling primarily.
Thanks, Mark. And we do, once again, we do have that poster at the end of the slides for people to post up on their wall to look at the 17 sectors.
Not very pretty though, Simon, is it?
Indeed. We should have added some pictures. So next slide, let's come back to China on this. So Karen and Ray, can you guys describe what Chinese investors, Chinese companies are thinking about in navigating the new UK NSI Act?
Well, I agree with what Mark said, that UK came late into this party, and for the past 4, 5, 6 years, we've seen so many battles between Chinese investors and the CFIUS in the United States, battling on the CFIUS scrutiny on transactions involved Chinese buyer. So I think for most sophisticated and experienced Chinese investors, they wouldn't be so surprised to see UK now come up with this new law to balance national security and foreign investor encouraging policies. Actually, China itself has also published a regulation 2 years ago to do the same thing, to bring off or to scrutinize foreign direct investment, foreign investment into China in the sensitive industries. So it's not a surprise. In terms of navigating the NSI Act, one thing that's important for investors to bear in mind is that the question they would think is, who should we turn to if we have such issue? Is it a lawyer's thing, or is it the lobbyist that we should turn to help smooth the relationship with the government? I think the answer is very clear. It's a legal proceeding, and it's a new legislation. It's within the territory of law firms. So the first thing is you need to turn to a professional law firm that has experience in dealing with the NSI Act, the proceeding. And of course, there's I think UK is still in a development stage of finding out what are the creative ways we can navigate the risk to avoid or to pass through the scrutiny more quickly and easily. We can borrow wisdom from the other jurisdictions, right? Like we have already a lot of experience of dealing with CFIUS, where we have done the measures to mitigate the national security risk, including like adding national security directors onto the board or divesting the assets or part of the assets that has the sensitive part in it or falling into the 17 sectors. Or we've also seen other professional firms that providing service to oversee the data. If it's the data that causes the national security concern, then can use third party to monitor the any activities related to those sensitive data. I think there are a lot of ways we can mitigate the risk, and a lot of things we need to think ahead before we being scared of this new regulation.
Thank you, Karen. You're definitely one of the top professionals that I know in China who speak CFIUS and have dealt with CFIUS issues so many times. And what about you, Ray? What are you seeing from a Beijing perspective on this?
Right, I agree with Karen. Simply put, Chinese investors have to do the deal, have to navigate the NSI Act anyway. And I think echoing the EY and the Grant Thornton survey cited by Stuart just now, the Chinese outbound investment into UK has accumulated deal value of like more than 60 billion in the past 20 years, ranking actually #1, the first among all the European countries. Is the top destination in Europe. So I think that trend continue based on what Stuart has presented in this session. I think what we need to do, and also we think that the Chinese investor they are doing right now, are to basically stay prepared and stay positive, right? I mean, the national security review and the scrutiny, just as Karen just mentioned, will continue to be the part of the usual UK and Europe deal pursuing and making. And as Mark mentioned, the 17 sectors are certainly key here. And no matter we're going to proceed with strategic or financial investment in UK, and we have to check these sectors and check with the lawyers, work with professionals to navigate through the mandatory notification and clearance process. As Mark also pointed out, it's obligation on the buyer. You cannot close the deal without the clearance process. And moreover, and there are some areas, maybe Mark can further elaborate on that, that require some voluntary filing for clearance, so-called voluntary notifications. So long as we get prepared and identify the areas and get the work done in advance and have a screening and pre-deal evaluation process, I think we're good to go. And the investment screening unit of the UK government, I would say, would certainly closely monitor the investments from China. And of course, as Mark mentioned, they're not targeting Chinese investments, but since there are, given the sheer volume of the investments from China, and certainly the UK government will review them carefully, and they certainly have the sort of unfettered discretion in determining the clearance process. We also recommend that through the council team, in due course, according to the right procedure, consult with and speak with the regulator to seek some regulatory guidance. And stay positive. I have to point it out at the end is, I think that's how we approach deals globally, including investment in the US. Try to get some CFIUS, mandatory CFIUS declaration and approval, and to make sure that we mitigate that risk. I think in this time of the year, since we are entering hopefully the post-pandemic era, and obviously UK's experienced post-Brexit era. And the UK government has to balance between the government security and promotion of a foreign investment. So I'm I'm pretty positive that most of the deals, correct me if I'm wrong, Mark and Stuart, will get cleared. So don't be deterred by this new process. Stay prepared and stay positive, Simon.
Thanks, Ray. In my notes, you used the words be prepared and the word positive 5 times. So I like that. So it's a good reminder for all of us to stay positive. And since we have a lot of experience navigating CFIUS, this is sort of something that's similar, but for another jurisdiction. So several of you guys mentioned a few things that Stuart mentioned. I want to go to the next slide and just ask you guys this question. What industries, for Stuart, Karen, and Ray, for both the UK side as well as from the China side, what industries do we expect to see trending for cross-border deals in 2022? And I guess when we think about this, it doesn't necessarily have to be NSI related. It can be what you guys are seeing from interacting with clients and deal makers. Maybe I'll start with you first, Stuart.
Yeah, thanks, Simon. Look, I think one thing we can't ignore currently is the kind of macro environment. I mean, obviously there's a lot of volatility out there with the war in Ukraine, with ongoing COVID restrictions in China and the general sort of decoupling themes. So, we need to sort of see how those events play out. And I think, obviously we've all got our fingers crossed that they play out, as we want them to. And no doubt, Chinese companies are going to react accordingly. As Ray said, from a UK perspective, our government continues to encourage business with China as part of its post-Brexit sort of global Britain strategy. But obviously it's clear that there are certain areas where businesses need to tread carefully, hence the NSI Act. So, I think what we're seeing is a kind of focus on non-sensitive areas that fall outside of the Act for sort of high frequency of deal making into the UK. I think it's also worth noting that Chinese businesses are under pressure in China to get to net zero by, I think it's 2060, the Chinese government put forward. So, we're seeing a lot of interest in the green energy transition space. And that goes from clean tech to electric vehicles and all through the vertical. So right from lithium nickel mining, right through to battery production and charging of cars. So infrastructure. So I think that's one thing that in particular I'm looking at seeing more of this year.
Thank you, Stuart. And Karen?
Yes, I think we will be, like what I said before, we keep being positive that all the 7 sectors I mentioned, including healthcare, consumer, TMT, would keep growing. But in one sector in particular, I'm seeing a notable change, which is worth noting for all the investors. That is the real estate sector. Traditionally, this is a sector where we've seen Asian or Chinese companies has a strong appetite, both from mainland China and from Hong Kong. We've seen a lot of them acquired luxury hotels, office buildings, shopping malls, plazas in London or any other cities in UK. But one particular change from the pandemic is that we probably going to see the strong or increasing appetite for logistic properties. And this is because of a change from the pandemic. We've seen a growth of business of those e-commerce platforms during the pandemic, or we can say the COVID boosts the business of the e-commerce platforms. And because of more online shopping is going on during the pandemic, and that in turn stimulates the market fever for logistic properties. And we've seen Chinese e-commerce platforms has been doing very well and growing very fast in overseas markets. They're changing from a China-based export-oriented role into building up or developing their own operations in overseas market, including UK. And by doing that, it also stimulates their appetite for building up their own logistic warehouse in the properties that they own by themselves, which are suitable for last mile delivery service. We've seen this trend not only because we assisted R&F property last year selling the logistic property to Blackstone, but also because we have represented many e-commerce players from Chinese market. And by dealing with them, this is a very strong signal I received from the market. Thank you, Simon.
Thank you, Karen. That's very exciting to hear. And Ray?
Yeah, apart from what Karen and Stuart mentioned, I think consumer goods and life science and biotech are particularly trending, and they're, the demands are particularly strong, and we got some increase in these sectors. And digital innovation, associated manufacturing, Internet of Things, artificial intelligence are important sectors for us to watch for. And also, as I concur with Stuart's observation that medical and elderly care is also one to look for, because Chinese population is aging. I think that's something similar we have seen in European continental areas and in UK as well. Smart city is another one, and lastly, as part of the carbon neutral initiative, or as part of this sort of new generation of vehicle and car business, the EV, right, the new energy vehicle is particularly a strong and trending area for deals in 2022, because I think it's a simple fact. Europe had just become the largest sales market for new energy vehicles, surpassing China back in 2020, because of the initiatives, because of the policy, because of the subsidy offering being offered by the European companies, and there's a great synergy between the car businesses and the markets in both ways, between the UK and European markets and Chinese markets. Simon.
Thanks so much, Ray, Karen, and Stuart on this. So last but not least, next we have as promised, we have our key takeaway from our panel speakers. I'm going to maybe perhaps go clockwise and start with Stuart on the bottom left, to have him share with the audience your major takeaway from today's panel discussion.
Thanks, Simon. Look, I'm conscious of time, so I'm going to keep this short. Basically, it's headwinds remain against M&A, but there are always opportunities out there. And I think the sort of last 2 years of COVID have shown us that it's still possible to do deals, virtually, even virtual due diligence, all the rest of it. There are still deals being done, and let's continue to stay positive, as Ray said.
Thanks, Stuart. Mark?
So just following on from what I've said earlier, really, I think do your diligence so that you're making an informed decision in terms of applicability of the NSI Act, and that will also feed into the timetable of your transaction. So keep an eye on those 17 sectors, keep an eye out for operations in the UK, and all should go smoothly. And also don't be afraid to consult with professional advisors to get some sort of a steer if you think you're in a potential area where you could be caught by the NSI. Thank you.
Thanks, Mark. And Ray?
Let me quote Steve Jobs saying, "Stay hungry, stay foolish." Right? Stay hungry in the sense that enhanced national security review is to be expected among all the advanced economies. Right? I mean, there's a Chinese proverb saying, "We won't give up eating, for the fear of choking, right? So we have to be keen to look for the financial and strategic investment opportunities in UK and Europe in general, and stay foolish in the sense that, we don't know what we don't know. So always seek help, support, and assistance from professional team like lawyer, like Dorsey, London team, to advise on the regulatory compliance side. I think we have to be cautious and do whatever we can to do the screening and preparation for deal opportunities, to mitigate risks and to increase certain certainties for deal making. So in general, I'm very optimistic about the UK-China deal making in the future.
Thank you, Ray. Very positive as always. Karen?
I would say the confidence we have on the cross-border dealings between China and the UK is not only from our observations, but also because our deep understanding that both countries are giving very clear domestic policies to boost domestic economy under the common prosperity and the due circulation on the China side, and the leveling up on the UK side. And we think both the two countries also share the commonality that they will keep looking outward.
Thank you, Karen. And I guess from the Hong Kong perspective, in having worked on UK deals from the perspective of Hong Kong as a mid-shore jurisdiction and dealing with China and the UK in that same equation, my key takeaway that I want to share is I believe that with a global M&A perspective, together with local knowledge and expertise in the UK, that makes a huge difference in bridging the gaps and making a deal a success. So without further ado, I believe we are on to the next slide. Next, please. And I see that from our webinar administrator, we actually don't have any time for questions, but that I believe it's okay because you can definitely send me or our webinar administrator your question, and we will get back to you by either calling you or sending you an email. Once again, thank you so much for sharing the last 1 hour with us. We will be emailing you our slide deck along with, at the end of our slides we didn't show today, would be our key takeaway, as well as the 17 sectors that we would invite you to post up on your wall when you are thinking about or when you are doing a deal involving London. So on behalf of my fellow speakers today in London, Beijing, Shanghai, and all my colleagues who are in the United States who are behind the scene as webinar administrator, thank you very much for spending your morning, afternoon, or very early morning, depending on where you are. Please feel free to contact us. We would be happy to chat with you or brainstorm with you on what we talked about today to guide you on your next transaction involving the UK. So thank you very much. Have a great day, everybody. Stay safe.